Welcome everyone. My name is Rande Howell with Trader's State of Mind, and this is our monthly knowledge base teaching session. Okay, and I am enormously delighted to have Jeff Kilian of the Inside Technician here. Jeff and I go way back. We've been working with each other for a number of years, and the thing you need to know about Jeff is he is one of the better traders floating around today, period. And he's going to be showing you a methodology that he's developed over 20 years. And he's got the goods to say, yeah, this really works. He lives in a tropical paradise and has a couple homes. And he's literally living the life that most traders want to aspire to. And what I want to do is say, let's take a look at what Jeff does through Jeff's eyes to show you what's possible for you. Okay? Now, the only bit of housekeeping that I'm going to do is this, is that we are going to hold questions toward the end, because what happens is that Jeff is going to be going through a process, and what we want to do is we want to get through with that process. He's going to be here and answer all your questions, and we just find that the questions get a lot better once you see the totality of what he's talking about, so you can start picking it apart and finding the places you want more information. So I've done about as much introduction to Jeff Kilian as I think Jeff needs, because ultimately you're here to see Jeff, and Jeff, welcome aboard, and I'm really looking forward to seeing what you got today. So take over.
Okay, great. Thank you.
And we're trying to get our picture.
Yeah, here we go. Okay.
There we go.
Okay, can I get a confirmation that everyone can see my screen and hear me just fine before we proceed? We have that confirmation that everyone can see my screen and hear me just fine.
Just in case, folks, is that Jeff has just asked if you can hear him. Okay, we hear him fine over here, but if you'll just simply type in yes, 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 or no, 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 I'd appreciate it, because we just want to make sure that, Jeff isn't talking into the black sky. Okay? Yes, yes, yes. Okay. You're good to go.
Okay, good.
Okay, thank you very much. Welcome to today's presentation on how to lock in a profit trading the S&P E-Mini Futures in real time. My name is Jeff Kilian. I am the Chief Market Strategist for the InsideTechnician.com. I have been trading for over 20 years, and this is the only market that I trade exclusively for many reasons. The most important is that it provides me with enough trading opportunities that I don't need any other market. There will be traders who trade many markets, in and out of different cycles, in and out of perceived opportunities. But in this case, with the liquidity that this market has, the European session kicking in at 3 Eastern Time, the intense amount of buying and selling pressure that can come in early AM between 6:30 and 8:30 AM Eastern Standard Time, and anything that can happen after the market opens is more than enough for any trader to get up early, go to work, and make more than enough money than she or he will really ever need. A little bit about me real quick here is that a long time ago I decided that this was what I was going to do no matter what I had to go through. And the story is long, but the short of it is that anytime we're going to get into any business, especially trading, there has to be a real high level of dedication in order to become above average. To become a great trader or superior trader takes an enormous amount of dedication, focus, real hard work. And they need to have a solid trading methodology that has proven itself throughout the years in order to be profitable. That methodology should also incorporate risk management, and should be based on taking only the best of the best trade setups so that you not only get in the business, you mitigate the risk, you maximize what you can make, and you stay away from bad trades because you learn how to identify with them and not just the high probability trade setups. So I want to talk about a trade, one of many trades, but this particular trade was taken this morning, and it's specifically geared for this webinar on how to lock in a profit trading in real time. Before you get into real-time trading, we need to take a quick look at what is the current state of the U.S. markets. A lot of traders, they do not understand the importance of this and how closely connected your understanding of where you stand within the end-of-day analysis. The current state of the U.S. markets has real advantages in trading in real time to up the profitability. Now you're looking at an end-of-day chart updated in real time of ES, that's the S&P E-Mini contract month 315. And these are the levels that I had laid out this morning before any trading ever happened. As you look at where the current market bottom, the new market bottom was established on a temporary basis right here from the open of 116, and that price being 1980.75, the market closed up. Under that pretense, the market either can trade down or long for the next session. Obviously caught in a newly established channel between the higher area at 1994.50, which was laid out by this particular bar from this pivot point low broadcasted out into the future, and the resistance level on the way up as established by the union of these data points here as the most important level for 2019 and 50. So there's an opportunity here, and possibly getting through 2019-50 even would be a greater chance to get to another profit target to the upside. So floor level established. Here we're already through what was once support, and then as you trade up, all the levels are known in advance. Very simple, very straightforward. The thing that I'm seeing here is the lack of volume associated with this open of this pivot point as compared to here, which drove the prices right back up. So we have some temporary bottom established, and that is witnessed by the money flow index, which we're going to get into real quick here. An internal pivot point low at this point, a better known as a through, an upward movement, and this was before today's session right here, as you can see. So floor level established by the prices, floor level established by the short-term smart money institutional people. Now this, in essence, is where everything should start on an end-of-day basis, because we have an opportunity to capitalize on a market that may be turning back around or is in effect going to go net neutral, but more towards the possibility at this point, just looking at this in isolation, that we do have an opportunity to trade long in real time. That may change as the day goes by, but for right now, at that time in the morning, early on, this is what I'm looking at. And outside of that, the stochastics momentum index, okay, at this point is still down, not turned around, but nearly flat. So this could have gone either way today based on just a few of the indicators that I'm looking at. So getting a daily perspective on the end of day analysis that is clear, objective, based on actionable intelligence first, and then walking into real time, is what makes the bridge into real time a lot more profitable. So here we are again, looking at the current levels here, and we know that we have possibilities of going either way, but the bias may be to the upside until prices continue to trade as the day goes by. Knowing that, let's get right into the real-time charts here. And here we are. So at this time, the first thing I'm taking a look at is the MFI, once again, the money flow index. And this is where we're at before prices trade up. I know that I have many resistance levels to the upside that can be used as price profit targets. If prices will trade up, these are the targets that I will look to in order for a guide to get out on a rally to lock in a profit. Now, the 15-minute levels are the approximated levels for the actual 1-minute chart, which I will monitor in real time, second by second, tick by tick, until I have the precision entry and the target has been hit. But the 15-minute levels are the navigational guide that every trader needs to understand clearly how to lay out these levels in order to be sure that you're not going to get stopped out. In this case, we have resistance located right here at 20, 21, and 50. Back here, that's laid out from this previous pivot point high on this bar's open that I have encircled. Right above that, we have a number at 20, 22, and 25. Now, it would have been possible to be long based on the 15-minute chart in isolation above 20, 21, 50. However, where these levels are so close, you need to take a lot of precaution in trading long until you're sure that the prices are not going to look back. Now, this level at 20, 22, and 25 is drawn from the past here by these data points, these two data points right here. And I want everybody to see this real clear, because learning how to do this and lay out these levels is critical to major success in real time. Basically, if prices can get through the level in red, which is the dominant 15-minute level, there's a real good shot. You have a free and clear from here to the next level to the upside as a target, and possibly here after that, and possibly here. But we need to get through this in order to get here first. So one step at a time, above this level, target, target, target. This is how to choose. Getting back to the actual 15-minute chart with all the levels laid out for the targets to the upside in advance, as you can see, here we are, and prices trade through right here within the 15-minute bar located between 6:45 and 7 a.m. The initial target is reached quick. It fills right above the red level at 20, 22, and 25. Here's 23.50 hit, and as prices trade up, you can see clearly that there is an opportunity to get to the 2025 level. Now, this is no coincidence, because once prices break a trend line, in this case, from the MFI's perspective, on increased volume, and never look back, you want to monitor this as compared to the levels on the way up in order to get out on a rally, and lock in a trade. Now, this is the basic practice that anyone who's a serious real-time professional trader will follow in order to become a highly profitable one. Now, as we look at what we saw on the SMI, only in real time, we had already had a cross from below to above, and again here, clear to be long. The Stochastics Momentum Index, including the signal line here, is one of the fastest indicators within this trading methodology that will confirm or not confirm, in this case did confirm to the long side before the move is taken off. The real value of any indicator in real time has to be its predictability and its ability to forecast future directional price movement with a high degree of accuracy. Now, in this case, the short-term money flow index, as combined with the MSI, and this is only two of the indicators in this highly profitable methodology that I'm looking at in the moment in order to get confirmations to consider taking a long trade. just because we have a 15-minute chart set up, just because we have a 15-minute indicator set up across the board and we are clear confirmations to be long, it does not mean that we're going to be long until we get down to the 1-minute chart and we look for the precision entry area and a larger amount of volume to trade in to get through the resistance level, to follow through and get to the targets to the upside. Now, since this morning's trading, I haven't done any changes to this chart at all on this 1-minute chart, none of them, so that you could see exactly what I was looking at when I was looking at it. The only thing that was changed was the preferred entry is now on the left-hand side, where it was on the right-hand side before, because the right-hand side at that time had no prices whatsoever. So 2022.50 is the preferred entry, getting above 2022 and then 2022.25, and here we are looking to be long. As you can see, shortly after that, larger volume comes in right here. The preferred entry is hit. More volume comes in from institutional trading, and there's the initial target that's hit on the spot, 2023.25, to get out on a limit order, if that's all you wanted. In this case, the money flow indicator and everything across the board remained clear to stay long. So there was no reason to get out of this trade until at least another target was hit to the upside, which was right here on the next 1-minute bar. And so prices trade up, and there's one target, two targets that are hit in real time. So now that we have demonstrated just a portion of that, I want to provide you with some, some real proof on how I did what I did, because we recorded the trade this morning in real time. And so we're going to get to that right now so you can actually see it, because I want to provide the proof that we have for you on this actual trade and how I locked in a profit in real time. So you're going to hear the commentary, and away we go. Welcome all traders. The time is now 6:51 a.m. Eastern Standard on 1/20/2015. If you're in a 1-minute chart, trade executed at the 20/22.50 on the preferred in right now, marked to the market in real time against 6:52 a.m. 120. Prices on the preferred in 20/22 and 50. Price level set to the upside. 23.25, 23.75, 24.25, and 24.75. Initial target is hit. Able to get out on a limit order right here. Long-term holders are good to remain trading ES this morning, your contract month. March 2015. Initial target hit. Additional volume coming in now, 1,100 lots. Anticipated long. MFI, CMF clear to be long. More commentary coming shortly. Managing the trade to the upside. Plenty of time to get out at the 2023.25 after the preferred in. Secondary target hit, limit order to be out at 20.2375, locking in a profit from 22.50 to 23.75. Additional volume continues to roll, 971 lots. CMF, MFI remain clear to stay long. So there's your target hit. Again, at 23.75 traders, the accumulated volume pushing prices up to a 15-minute level right here. As you can see, 25, real close on this now. $25 here, just below the new level that was established on the charts, 23 and 50. noting the change. $25 to the upside, next target. Prices may continue to trade up. CMF still up, clear. MFI still up and clear, as you can see. Here, the target 23.50 was hit, called it on an earlier limit order to lock in the profit. And so, as you can see clearly here, in this case, a preferred entry price was established at 20, 22, and 54, the preferred end, back on the 1-minute bar at 6:53 a.m. Now, to lock in a profit on a real-time trade, all the targets to the upside have to be laid out ahead of time. These are all based on previous levels that have been established by smart money and have been identified as high probability targets to the upside as prices move through specific levels. In this case, okay, what I wanted to do was show all of you that there's a reason for doing this, and we know, we're very well aware that there are many people out there who are supposed traders and they're educators, and we know that they don't really know how to trade. We have over 100 live trades just like the one you're seeing today. This one was uploaded to YouTube shortly after I got out of it, so that you can see in a fully transparent environment that what we do here is 100% legitimate, and it's totally above board. So to get through that, now let's take a look at, you know, the longer term benefit of trading and the possibilities of getting back in, maybe your second leg to the upside. The 15-minute targets that were laid out to the upside were clearly hit here, and then here, and then here. So every single target that was laid out to the upside for everything that I had created for my analysis at that time was right. And later prices have traded back down, and as you can see, sharply down for an afternoon. Great gain. Posted, closed out today. One of the traders that's come through the system here by the name of Alex Felix, a recent graduate from the Executive Mentorship Program, was nice enough to give us permission to go ahead and take a look at what he had come up with and his trading today regarding what he has learned here. Now, what I want to say to you is that in any trading educational environment, it should be a structured, learnable, and repeatable process. If it's not, then the real possibilities of what you're learning, it won't happen. So everything has to be fully planned out ahead of time. And knowing that, in this particular case, in that program, it's very, very strict, very comprehensive, very selective. And this is what can come out of it. Now, this fellow has just finished up shortly ago, and he's sim trading now because he was recommended to do so until he had enough time and grade in. And I know Randy and I strictly agree on that. Until the person has enough time in trading, they're totally confident to go out and do this. Now, the email says Jeff was comfortable taking the move. I've started leaving my thoughts on the screenshots. I find this helps me better identify with the trades I took and how I felt at the time. I watched your video this morning. I know that I've been catching some pretty good moves over the past few weeks. However, when the market tightens up, I know I'll be put to the tests. I'm comfortable hanging on to trades. However, there are times when I'll need to get out quickly. The trade you took early this morning was a good example of this. I'll have to keep a close eye on the daily and 15-minute charts for the safer entry levels when trading real time. So let's take this screenshot right from his email, and we'll open this up so you can see this. And I'll see if I can make this just a a little bit bigger here. Now, what this really represents is the structured, learnable, and repeatable process. It represents that what is taught can be learned. And this is exactly how, if I had not been planning this webinar with Rande Howell this morning, I would have traded this down move, as so many we had before. You have a preferred entry right here at 20, 75 to the downside. He's in on a limit order at 20 and 75 right here, and out on a market order at 2018 and 25. That's a gain of 2.5 points. In, out. Back in here, right? Second move, a lot of volume comes in. He's in at 2017 flat, and out here on a stop that he had placed to lock in a profit in real time for a gain of 2.25 points at 2014.75 right here. Prices trade down again, another preferred entry at 2012. He's in at 2011.75, and he's out right here on a target, and this is more than likely a 15-minute level at around the 2007. Notice that every single level on the way down on the 1-minute chart is laid out ahead of time. This is the way of a true professional. This is how thorough a person needs to be, leaving nothing to chance. And why? Because no matter what happens, you're prepared so that you don't react emotionally. I know that Randy will attest to that. This methodology was specifically geared to find, track, and trade the largest market participants that can and do move prices from one level to another. To get in at the right time, out at a predetermined price profit target to lock in profits. In this case, excellent trading day, 3 different trades taken, and the fellow walks with a 9.75 gain, with the last trade gaining 5 points and very short hold times. And if you look at the initial move here, okay, this is where the sure money was. This, the initial move, is always the best, like the one this morning. Sometimes when the market doesn't do what you expect to keep trading up, it's telling you something. And in this case, prices exhausted themselves, and later on they turned back around and traded down, because for the session, when the setup came to trade short, all the 15-minute indicators fired right here. And the last one right here at this point, the 1-minute bar before the preferred entry was taken. So following the rules and not deviating from your trading plan based on your methodology once again proves out that if you put your head down and you go to work, there is a sea of real hard cash to put in your trading account, no doubts whatsoever. I know that there is a direct relationship between psychology and profitable trading, because I had to go through this myself. I know that there are proven people, as you know, to help traders learn how to control their emotions. One of those things in this case is a methodology that is highly selective to help you cut right through the chase. And if you need somebody to work on the psychology side, then you already have the right person. This methodology is specifically geared to give you the greatest positional advantage as a private trader, because this is really the greatest positional advantage that any trader can have, is being on the sidelines. You need to wait for the trades to come to you. You really don't have any other choice. I'll be totally straight. You have to wait for the trades to prove to you that they're worthy of your money, your time, your emotional capital. You don't have to prove anything to the market. Nothing. Let these trades come to you. Let the setups unfold. Don't get into the trades early. Get in when the extra volume comes in. Get it at exactly the right time. Get out. Lock in a profit when your skill level increases. Okay, take the second and the third move, because now you know what to look for. remember, there's always another trade, but there's not always more money. This is probably, if I could only get across one thing today, it's this. And taking the best of the best setups, learning how to do this. If this is what you want, this is the way it needs to be done. I mean, I know in my early years, I was studying for 3.5 years by myself, talking to traders all over the world. Literally all over the world. Phone bill, $1,000 a month. This is back in, 1996, 97, 98. Okay, we didn't have webinars then. You have an incredible advantage today versus when I was going through my time. I'm talking to a lot of famous names across the world, and they told me, you're going to have to figure out how to create a methodology that will find where these people are trading and then fade those moves at the right time. If not, you're never going to make more than 30, 40, 50% a year. You're never going to make 100, 200, 300% a year. It's not going to happen because it's impossible. And I said, okay, so how do I do that? And they said, it's up to you. You're going to have to figure it out. And that's how it started. And I spent 3.5 years studying every type of technical analysis known to man at that time, exhausting all the indicators, back testing everything, spending an enormous amount of money and time to come up with this. And you know what? It's better this way because you understand it. It's not following a system blind or the rules, the parameters which dictate the entry and exit of a position or the firing or non-firing of an indicator are not known. How would anybody possibly expect to trade a black box system for any extended period of time? You have to know the methodology you're trading. It has to become you, and you have to become it in order to really become a highly profitable trader. Now, I have traded other markets. I've traded many. And again, I only trade this because I don't have to trade anything else. I mean, the minimum price movement is 1/4 point. It's $12.50 over 1/4 point. Full point move is $50. So based on the contract, that the count of contracts that you'll trade, your profit will go up. And the market is open nearly 24/7. So most of the opportunities coming in after the European session opens at 3, things move along. And then after, 5:30, 6 o'clock in the morning, that's when things really start to roll. After market opens, maybe again, in this case, yeah. And then you're looking for possibly an early afternoon, late afternoon sell-off, but the real lion's share of the money's in the morning. And so a lot of information today, no doubt, a lot of information. But it's what needs to be gotten across to all of you who trade, so that the information you're receiving is the right information. So you don't go astray, and you get more than a basic idea of what you need in order to do this. And so today, as we finish this up, before we get to the questions, I just want you to know that we have been recording this, and it will go out to the YouTube channel, and everybody will get a link to see all this again. And just before we finish up, you'll have the opportunity to sign up for some free trading guides that were written by myself and Adrian Bickham, the agent for the Inside Technician, very skilled technical analyst as well, and real-life trader. These are not just any ordinary trading guides. They have a lot of information about divergence analysis, how to identify what is a real negative or positive divergence, which clearly indicates pent-up selling or buying pressure that has not yet taken place in the form of prices trading to the downside, like here and here. And these are real opportunities for incredible amount of profits like was had in this particular down move because of many negative divergence that existed before this all took place. That is an excellent technique to learn. And you'll get, the basics, the basic idea out of the trading guides. You'll learn all about smart money. You'll learn about some of the indicators that we use here and get a pretty good handle on what this methodology is, and it's not going to cost you a dime. Taken a lot of time and a lot of money and a lot of intellectual property to put into these trading guides, as another way to provide clear, concise information that can be used as actionable intelligence so that we can separate ourselves and what we do, once again, this way, just like all the YouTube videos that are posted in real time, trades, right, from anyone else. And I think that about covers it. I think that's about it. Yeah. So before we finish up, we are going to open it up for a few questions here. So maybe, Randy, you could come back on the mic and open it up for some of the questions that we have, and I'll be happy to answer as many I can for as much time as we have.
Yeah, well, we have a bunch of them. Dolores is trying to get to the top of them.
Okay, no rush.
Okay.
Oh, here. This is the first one.
Okay. What does SMI stand for?
SMI is the short for the Stochastics Momentum Index. The Stochastics Momentum Index is the stochastics indicator with a momentum line included in the actual indicator and overlaid on top of the stochastics indicator itself. It has a smooth constant to it. It is a slower, almost like an average of what the stochastics indicator is, so it's slower, and the signals themselves that come from that indicator, for example, in this case, will be the crossing from below to above to be long, and from above to below to be above to below, excuse me, to be short. In many cases, when we talked about, touching on divergence analysis earlier, you'll have a price area, in this case this pivot point high, is compared to this base formation high, where a trend line will be drawn connecting the outer left-hand corner of this bar to the outer left-hand corner of, wouldn't matter an open or close, as long as it's an open or close. All the analysis is based on the 15-minute chart from the closing prices, but the trend line can be drawn from an open or a close. And in this case, the Stochastics Momentum Index has officially identified a negative divergence, which I talked about earlier, showed the pent-up selling pressure that had not yet taken place in the form of the movement to the downside, the cross from above to below here, and the continued movement to the downside leaves one already clear to be short, looking at this indicator in isolation.
Okay, you got it? Okay, next question. This one might be, Jeff, this may be a little difficult because it came in as you were actually going through a chart.
To the video, I believe.
On the video. I think it was on the video. On this 15-minute buy, was a buy stop on breakout? Does that make any sense to you?
Okay, I think I got it. The red level that's up there is a 15-minute level that is identified on the 15-minute chart as compared to a 1-minute chart as being superior resistance. So it's got to be traded through in order to be long. No trader should place a buy stop a quarter of a point above a 15-minute level. It is there as a navigational guide and a level that has to be crossed from below to above, but the precision, price, and point to be in is always identified by the 1-minute chart, because the 15-minute levels are the approximated levels for the 1-minute chart.
Mm. Okay, next question. This is from Amy. What are you using to determine your S and R levels?
My stop and reversal levels. Well, in this case, you can see that I have the levels to the upside laid out, and this is what we had used for the initial targets. So I won't say that this will be a stop and reversal level until prices have reached it and started to turn back around and have confirmation that I'm trading off the most recent ceiling, which is down close below this area here and below, What was once resistance turned to support. Now I'm clear, oddly enough, to be short below resistance, turn to support, and I can be short here. So I'm not using, if you're thinking about a parabolic stop and reversal indicator that's possibly a system, no. Because it's not enough of a confirmation in order to consider being, stopping and reversing. The actual stop and reversal comes from the prices that are traded on a 15-minute chart, which lay out a specific level that needs to get violated to the downside or to the upside. In this case, for a stop and reversal, this area has been established as a base formation here, locked within a channel more or less outside of this open. Prices trade down once again through the 15-minute level, and I'm looking at the 1-minute chart for the precision entry to be short, just like Alex Felix did. Confirmation will come from the indicators, and we don't have time to go through all of them, but I can guarantee you that all of them within this methodology fired in order to be short within this 15-minute bar from 9 that closed out at 9:15. That's probably the best I could do on that answer.
Okay. Well, here's one from Zed. It's a 3-question thing, so it starts with 1. Why do you use lagging indicators instead of price and volume only?
Well, lagging indicators.
His words, not mine.
No, it's okay. How much experience do you have trading? How long have you been trading, Satan? Do we know?
No.
We have to go to the very end to see if he answers that question. 1 year.
1 year.
1 year. Okay, that answers a large part of the question, and it is a valid question. The SMI is not a lagging indicator at all. The SMI is guaranteed to cut those market turning points running like this here, this here, this here, right? Back long here, short here, and it's guaranteed to give you, what you need to be at the right place at the right time. The MFI is a leading indicator because the smart money comes in before the prices move. The smart money will always show their hand by money flow indicator representations, which are basically mathematical formulas based on price and time. So if you're looking at your charts and you're looking at the MFI or the chicken money flow, which I also use, you'll see that they are leading indicators. They're not lagging indicators. In this case, in this methodology, the only lagging indicator that I use is the moving average divergence indicator with the standard parameters, so that outside of all the volatility that could be taking place, outside of all the other indicators firing, I need confirmation on the 15-minute chart that that trend has officially changed from one level to another.
Number 2, what is your batting average and Sharpe ratio?
Okay. This is a little more in-depth, but I can tell you that we have documents that's been created. So ask him to make sure he signs up for the trading guides. We'll mark his name, and we'll make sure that he gets that document that has all the numbers that he's probably looking for, because he sounds like he knows a lot, which is good. He knows what he's supposed to have for proof in order, to make a decision about where he wants to learn. So, but this is way too long to go into in a webinar, but I'm happy to provide it. It was a running subtotal of almost 2 years worth of trades that were taken when the nightly market intelligence report was running. It's got all the stats more than he could possibly want in order to answer all those questions, and we'll make sure we get it to him. He's just got to make sure that he identifies himself, and then it's done.
Zed. Okay, the last one. Please elaborate on how you draw the RES and the SUP lines based on the 15-minute chart. And then the correlate of that, why don't you just trail 1 minute bar by bar to target with the full position?
Because it's not profitable.
That's good.
Not as highly profitable as what we've come up with here. I've tested everything that he's talking about. If you look at how to select, you're looking at a series of data points that are gravitated to a certain level. This is what you need, because the dominant data points are laid out by a series of opens and closes, specific areas that prices will more than likely find on the way back down. You got to remember, this chart was created early in the morning, and here we are with prices turning back around in case they did trade down, right, all the way down to 2003 and 75 that I'd laid out. So every one of these was hit, and that's no coincidence. This is something that's taught, once again, in great detail within the Executive Mentorship Program, because you're talking about the highest level of education that any trader is going to need. And I'm not trying to push it in that direction, but this is something that, you know, almost nobody knows how to do right. The guys on the floor do. I've taught a lot of traders who work on the floor how to do this, but outside of that, there's only a handful that know, really know.
Okay, and this is from Marcy. Do you mark the levels on a 15-minute chart and then they show up on the 1-minute chart?
I lay out the levels on the 15-minute chart, and then I go to the 1-minute chart. And I'm looking for the 1-minute chart levels that are most closely aligned to the major 15-minute levels as major support or resistance levels. Now you got to understand, in between those 15-minute levels, the 1-minute chart has obviously laid out incremental levels in between those major areas. And those are the final levels that need to be laid out, like Alex Felix was taught how to do before you're going to trade in real time.
Okay, and this is Zoltan. This are not FIBO levels, I guess. You not using them? Fibonacci levels. So.
I do use Fibonacci on 15-minute charts. Absolutely, I do. And when I have what I call a match between a certain Fibonacci retracement level and a major support or resistance level that's laid out on a 15-minute chart, which was there long before I laid out Fibonacci, that match provides a level of predictability, reliability, turn to profitability that otherwise is not possible. You just don't have the time to go into it here.
Okay. This is from Dave. What is the win-loss rate, average win-loss, and expectancy of the methodology?
Tell him he's got to have to request the information, and we'll make sure that Adrian sends it out to him. It's way too long to go into in a webinar, but we have it.
Okay.
We have it all.
Okay, and this is from Jane, and I'm going to botch this word. One line is stochastic, and the other line is its average?
Here, the momentum. Yeah, it is considered an average. It is a smooth constant. It is a formula that is written within this program here so that the signals are provided when you get the cross from below to above. The actual calculation is something that, you know, you'd have to click on the parameters within the NinjaTrader program itself, and you can see everything here within the fields that will give you all the answers you're looking for. That's probably the best I can do.
Okay.
An average, a simple answer, is it an average? Yeah, pretty close to that.
Okay. Here is from Anne. How much does the candlestick pattern contribute to your execution number on the ES?
To my execution number. Okay, let's see. The candlestick patterns, for example, in this case, you can see a very well-controlled sell-off to the downside with a higher degree of volatility in the form of the low and the high. The lows here, right, here. Things have calmed down here. Volatility has become much lower. We have a more organized chart pattern here. Smaller range bars, looking for a breakout to the upside, maybe above this level, target, 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 target. So the answer is when you have a lot of high-frequency trading, and this will be easy to find because there's been quite a bit of it lately. You know, this kind of business here. This is what I will not consider trading. I'll consider trading get out of low volatility here to be short. I'll consider getting out of low volatility here to be long. So the chart pattern has a direct relationship on what I will and what I won't trade. This, I'm not going to touch this at all. I'm going to wait. And that goes back to, you know, waiting for the trade to come to you and not pushing it.
Yeah, it's really interesting. As I was in Princeton a week and a half ago with BlackRock, and they actually moved their trading headquarters for their institutional trading to Princeton to be able to match up with the high frequency people. Very interesting. Could you please summarize your entry rules and exit rules? Just go for it, Jeff.
Yeah, the entry rule is when all the 15-minute indicators have fired, right? And I've gotten through at that time or before a 15-minute level that I needed to get through, right? That was significant support or resistance. And then I've gotten through the absolute 1-minute level with substantial volume, and I have the right chart pattern behind me. That's when I'll be trading long or short, and not before.
Okay. This is a follow-up question from Amy. I'm not asking about stop and reversal, sorry. I am asking about the where do you get your support and resistance levels. Thank you.
Okay, in this case, we have resistance levels that are laid out on the 15-minute chart, right? And those resistance levels come from the past. For example, here, prices were trading below this level. So in order to be long, they have to get above it if prices are very close, because if you get in before, it's either a very short-lived move and then more than likely getting stopped out because you have substantial resistance here. This level was chosen from this price area. Anything above that was chosen from the past, from here, chosen from here, chosen from here, and chosen from here. So all these resistance levels act as price profit targets when you're going to trade long, and that's exactly where the price has got to. And as you go to the YouTube video, you're going to see the same thing. So all the information that you're looking at right now is exactly what was in the video. So nothing's been tampered with. And this is what I like. I think we have time for maybe one more question.
Okay, well, there's actually one that is straight into this. What is the link for your YouTube channel? Do we have that pasted in? And we just pasted that in, okay? So okay. I guess we have time for one more. Let's make it a
Did we get the link in for the live trading guides yet?
Yeah, that's what it was, Randy, the link for the live trading guides. I just sent it out.
Okay.
Okay.
Would you use a non-time based charting other than a candlesticks?
I have considered it. I mean, a long time ago, I studied with Tommy Dorsey, who was probably the pioneer in point and figure charting. That's with the emission of time, Victor de Villiers stuff going way back now, 30s, right? If you know what I'm talking about. All the technicians in the room will know this. And it is possible to use it as a mutual fund timer, right? But you're never going to be at exactly the right place at the right time with the non-time confirmation from a price chart as in point and figure, because you need the time. For example, you have the vertical axis and you have the horizontal axis. One is price and one is time. When you get to the intersection of price and time at a specific price level, that is the precise point based on the methodology, you know, having fired a buy or sell signal to be long or short. I mean, without the time confirmation, I don't see how you could get the kind of profitability that, you know, one would be looking for in today's world, and not getting stopped out left and right in real time.
Yeah,
that's a big one.
Okay, we're out of time on that. So, Jeff, do you have anything that you want to leave these guys with, or go for it?
Did we get the link in for the live trading guides and the YouTube channel?
Okay, you've got that.
Yep. Yep.
Okay, good. So let me think here for a minute. Let me think.
Prosperous New Year is always good.
Yeah. I was told that there's a lot of very astute real-time traders in here today.
Well, there you go.
This is what you're seeing here today is the tip of the iceberg, right? It's a presentation of, you know, the basics behind what to do. Okay, there's no way I can give you 25 years of trading experience in 1 hour. That's impossible.
Right.
You know that. If you really want to learn how to do this, go ahead and make your relative comparisons. Right? Take a look at the YouTube channel. Look at all the trades. Understand how market timing is so critically important when crossing the bridge into real-time trading. You know, that without it, I mean, you're driving a race car, you know, it just does not have the kind of tires that you need in order to be able to get in and out of situations. It's not going to happen. Everything that you're seeing here was fully backtested. There was over 25, I think I spent 26,000 on this. And we're going back to the TradeStation days. For those of you who are that old, I'm 57 now, and you know, you're talking to you know, Sam Tennis was the guy who wrote Easy Language, Mike Barna, solution provider, to get all this stuff finished up for me after, you know, up all night every night for 6 months and finishing up writing code within TradeStation to try and systematize it. At the end of it all, it really wasn't worth it because I needed to look at the charts. I needed to understand exactly what I'm seeing in a moment because I'm very visual. And most traders are. And therefore, you can see it in the moment when it's happening. So you can confirm, you need to confirm, I need to confirm, everybody needs to confirm exactly the truth behind what the real probabilities of the trade that is in front of you are presenting or not. And I think the last thing that I really want to leave everyone with is take it to heart that your greatest positional advantage in real-time trading is waiting for these trades to come to you, right? So that you're not overtrading. You're taking the best of the best setups. And you know what? If you get back to your computer and you miss the trade, and so what? There's always another day. There's always more trades. But, you know, the capital to get it back is always harder after you have a series of losing trades, plus it affects you emotionally. And if you don't follow the rules of a proven trading methodology, anyone, especially this one, things are going to change real quick, and you're not going to like it. So you have to be disciplined, and you have to understand what you're getting into here. These are some of the smartest people in the world. And you need to trade on the same side of them, and you need to be there at the right time in the right place. Because when they move in a big way, as you'll see on all these videos that are on the channel, and you know, any new ones that'll be posted. So being on the right side of the tide of the market, and then being on the right side of these people who can control prices, and they do from one level to another, is something that can make an incredible change in a trader's bottom line, real profitability. I'm talking about cash in the account. Cash, that's where it's at. So before I go, I want to thank Adrian Bickham, the agent and administrator for the Inside Technician, for helping me put all this together, and all the advances we've made with the company and the website, all the new trading guides that everyone will receive today. You'll probably receive a welcome letter, and probably by tomorrow, at the end of the day, you'll receive your first trading guide, and then a series of them every few days, so that you get a chance to get through this and take a good look and learn something from this. I want to thank Rande Howell and Dolores for giving us the opportunity to present to all of you, and I wish you, all of you, all the best for your success in trading in 2015. I'm out.
Thank you, Jeff. Thank you, thank you, thank you. And what happens here is that a lot of people ask about what's the link for the YouTube. Just type in Jeff Kilian and go to YouTube, and they'll just start appearing. I want to thank each and every one of you for showing up. It's Jeff is a special treat. He really is on the top of the game. And I will also say is the urgency to act that used to be so powerfully effective before you got into trading is one of the most dangerous traits to take into trading. It's that patience, the ability of the trade coming to you, like Jeff was saying. That's the real key. That's where there's always another trade. And friends, I want to thank you for coming, and I'm wishing you a prosperous new year. Check out Jeff's stuff, okay? It's worth a look. It behooves you to look. If you're looking to learn how to really manage trading and understand how to see through the eyes of a really professional expert trader, this is what it's at. So I thank you for your time, and we're going to sign off right now. Thank you, Jeff. Thank you, Adrian. And we will see you later. Take care. Good night, everybody.
Okay. You as well. Thank you again.